Walmart stock, ticker symbol WMT. This stock is down almost 10% year to date, which is pretty much similar as the S&P 500, which is down 12%. But please notice the big drop around May, which is caused because of a weaker outlook. Walmart is going to present quarter results on the August 16. It's expected to deliver a 1.60 EPS and a 149.7 billion in revenue. But all 25 analysts voted in negative on the earnings. And as we know, the latest earnings was a big miss on EPS and also a weaker outlook. So does this mean that Walmart stock is in danger? In this video I'm going to show real quickly what Walmart does, a view at the historical returns, the fundamental analysis, dividends, their major competitors, and in the last part I'm giving you my price target to see if they are a buy or not. And I think you definitely want to see that part, so make sure to watch until the end. I'm also very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does Walmart do? America's largest retailer by sales. Walmart operated over 10,000 stores under 46 banners at the end of fiscal 2022, selling a variety of general merchandise and grocery items. I think we all know Walmart. When we check the latest quarterly report, we see that the problem were the margins. It decreased a lot. Gross profit rate went down 87 bps and operating income went down 23% year over year. And when revenue is growing at only 2% year over year, you have a big problem. Especially when margins are already very low. And don't get me wrong, this is very typical for this industry. Another interesting thing is that e-commerce net sales growth increased 1% while contribution to comparable sales was a minus 30 bps. So it basically means that less people are returning when ordering online. Overall, the comparable sales are still 3%, but this is because of the average ticket increase, not because of the amount of transactions. So this could be a bit misleading. And I'm really looking forward to see the numbers next week. To be honest, I do think that Walmart will disappoint next week with the earnings, because they give several warnings about the current results and the current market situation as the outlook. So I'm really looking forward to see the results, since this stock will go down big time if they disappoint again. And for Walmart this is something unique, since it's known and also loved for being a steady dividend stock, and maybe even a defensive stock. Let's check the historical stock price to see what happened there. I decided to include the S&P 500 as a benchmark and Costco, Kroger and Target as their main competitors. On the 5-year chart we see that Walmart is up 75% including dividends versus the S&P 500 being up 88%, meaning you were better off owning the S&P 500. Costco returned a 272%, Kroger a 119% and Target a 249%. All other stocks outperformed the S&P 500 big time except for Walmart. On the 1-year chart it's pretty much the same. Walmart is down 11% while the S&P 500 is down only 3%. Costco is up 23% and Kroger is also up 11%. Target is the only stock being down big time with minus 34%. On the 6-month chart, Walmart is down 4% versus the S&P 500 being down 5%. Costco is up 5% and it's almost the same for Kroger. Target is down 19%. On the 1-month chart, Walmart is up 3% versus the S&P 500 being up 8%. Costco is also up 8% and Kroger is down 2%. Target is up 15% after being down for a long time. So with Walmart stock underperforming the S&P 500 and with a weak outlook for the coming quarters, it doesn't look that good. But this doesn't have to mean that it couldn't be an interesting buy. Let's find out by checking the fundamentals. But first, if you made it this far in the video, I want to thank you a lot for watching this video. I also want to mention that I'm almost at 1000 subscribers, so please help me achieving this huge milestone by giving me a subscribe. In return, you will receive similar analysis to this one every week. Let's continue by diving into the fundamentals. Walmart is a 356 billion market cap company, which makes them one of the bigger companies in the US. PE ratio is at 27, which is quite high for such a big, slow growing company. So this could mean that they are overvalued. Later in this video I will give you my 3 price targets to see if Walmart is a buy, so make sure to watch until the end. The 12 trailing month revenue is at 576 billion, and in this graph we see that the revenue went up quite nice and steady over the past year. So this looks really good to me. But keep in mind that it will be harder for Walmart to grow, and that's also why you see only 2% growth year over year. The net income is at 13 billion, which gives us a profit margin of 2.3%. And keep in mind that it took a hard hit after the earnings in the past quarter. So keep an eye on this number next week in the earnings report. Next to that, 2.3% is very low and of course below my 10% minimum. But keep in mind that this is very typical for companies like Walmart to have lower margins. So I'm not that worried about a lower margin in general, but I'm worried about the decreasing margins and weaker outlook. Return on assets is at 6.3% and also below my 10% minimum. But again, this is very general for companies in this industry, so I'm not that worried. Return on equity looks good at 16%, but the most important number, return on invested capital, is very low at only 2%, especially since it's lower than the 5-year average of 10%, so this worries me a lot. Another thing that I really don't like is the cash versus debt. I do prefer companies which are capable of paying down at least 50% of their debt. Walmart has 11.8 billion in cash, but 68 billion in debt. And probably they issued a lot of debt because of the lockdown periods, or whatsoever. But this is not good. So for me, it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends, do acquisitions and a lot of things. In this graph we see that free cash flow is up and down quite a lot, so that's the first thing I don't like about this graph. Second thing that worries me a lot is the fact that since 2017 free cash flow is decreasing big time, except for a big spike, so this doesn't look good to me. This means there is less money to pay dividends, pay down debt or buy back shares. In this graph we see that shares outstanding are decreasing a lot, so this comforts me a lot. And to be honest, this is one of the first things that comforting me. They don't issue new shares. But keep in mind that buying back overvalued shares isn't really efficient. So I wouldn't blame them if they wait for a more fair stock price and then buy back shares. But okay, it's a good thing in general, so this is good to me. Next up are the dividends. A thing that people love about Walmart. Dividend yield is at 1.73%, which isn't the highest to be honest, but okay, it's pretty good. Annual payout is at $2.24 or $0.56 each quarter. Payout ratio is at only 36%, which is a good thing. They have 64% left in cash to pay down debt, buy back shares or do other things. The 5-year growth rate is really low at only 1.93%, but okay, it's growing. Dividend growth is at 0 years, according to Seeking Alpha, but this isn't correct when we check the historical dividends. Overall, I don't see the excitement in the dividends with Walmart. It's not the highest yield and it's also not growing in high amounts. Payout ratio is really nice, but with the decreasing free cash flow, dividends might be a danger in the future. Next up are the fundamentals of Walmart versus the major competitors. I decided to include Costco, Target and Kroger. We see that Walmart is by far the biggest company in terms of market cap and employees. Walmart is trading around a 20 PE ratio non-GAAP, while Costco is at 40. Target and Kroger seem more fairly valued at low teens, so to me they are the winner here. Walmart and Kroger only have a 3% revenue compound annual growth rate, while Costco and Target are at 12% and 9%. So to me they are the winner here. And it's the same story with the net income compound annual growth rate and the free cash flow compound annual growth rate. Target has the highest margin and also the highest return on equity and return on assets. Costco has the highest return on total capital. All companies seem to have a lot of debt compared to the free cash flow, except for Costco. So to me, they are the winner here. The last thing that I want to check are the dividends. Target and Kroger both have significantly higher dividend yields and also a better payout ratio. Dividend growth is also higher at all other companies since Walmart is at only 1.9%. So to me, every other stock in this list is a better dividend investment. Overall, Walmart didn't beat any stock in the fundamentals, so this doesn't look good for them. But let's see what happens when we check the price targets. I'm using the Everything Money software to come up with 3 price targets. I'm filling in a low, mid and high assumption based on what I analyzed. To be honest, the things I saw during this analysis didn't look that good. so it's easy to fill in very conservative numbers. But I decided to be a bit more optimistic and still conservative. So let's start with the revenue growth. I'm filling in 0.5 growth for the low assumption, as I expect things to slow down, 1.5 for the mid assumption and 2.5% for the high assumption, which is the 10-year average. For profit margin, I'm filling in 2% for the low assumption because of the 5-year average, 2.5% for the mid assumption because of the 10-year average, and 3% for the high assumption. It's the same story with the free cash flow margin. PE ratio is way too high at 27, so I think you don't want to overpay for a big, slow-growing company as Walmart. So I'm filling in 12, 13 and 14, and it's the same story with the price to free cash flow. My desired annual return is 12.5% since I can get an easy 10% annual return with owning an ETF. Right now, Walmart is at $129. I hit analyze, and we see only red numbers. We have a low price target of $39, a mid price target of $55 and a high price target of only $73. So this doesn't look good, especially since I think the mid range is the most justified here with $55, which is a big drop from $129. My final conclusion on Walmart stock is that in my opinion it's not a buy at current fundamentals. The company is too big to grow in high amounts, so you want the fundamentals to be great. And they simply aren't. Dividends are okay, but not great as well. And free cash flow is decreasing, which worries me a lot. So I will skip this stock and wait to see what happens with the upcoming earnings. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.